Hello, and welcome to Foolish Transparency Trading. I am your host, Sebastian, and today I'm going to teach you the secret to life and making millions of dollars. I wish it were that easy. I wish I had the ability to do that, but that is not why I'm here. Today, what I want to talk about is common trading mistakes that cost you a lot of money when you're day trading in the market. I don't care if you're trading options, futures, currencies, and forex, whatever the case is. These common mistakes are keeping you in the negative and keeping you from being a profitable trader, and we're going to talk about them now. The number one reason that you're not making any money in the market and you're not a millionaire is because you lose money. And that's it. We're done. Have a nice day. I'm out of here. No, I'm just playing. We're going to elaborate. Okay, so let me elaborate for just a second. When it comes to trading, what I've known is this, or what I've learned in my, I've been trading since February, but I've learned from other people's mistakes and my mistakes. A lot of us as new traders, we don't realize that getting into a trade isn't about being right or wrong per se. You know, and a lot of times you put so much relevance on whether you're right in a trade or wrong in a trade. But let's look at this. Excuse me for just a second. Hit the pause. Okie dokie. Still nursing a little bit of a code there, so let me speak up a little bit. Alright, so as you can see, there's a huge wick here. In the beginning of the day, you might be saying to yourself, okay, I am instantly calling this down. It bounced off of 200 EMA before the market opened up. Market opens up, it continues to push down. I now know that this is going to be a down day. Reason being is we hit some previous highs, and if I was to scroll back a little bit, I would see those highs from the prior days and realize that, okay, right here matches up perfectly. We're pushing down. We're going to continue to push down. We've been in the downtrend. Now we're in the downtrend for a second day. We push down. At 10 o'clock, I catch this. It shoots up. I wait for it to stop, hop into a trade, and then I get an entire almost $8 fall, which is an amazing trade. Switch over to 11 o'clock. We hit there, that new low, and then it bounces up. And now you can ride it back up to the top. And where you learn that is in the past, actually. So it's not about being wrong. If you look at Wix, what happened is it went all the way down, boom, bounced all the way up. So you might have been right that, hey, it was going to go up, but it firing down into this area here is going to shake you out of your play. So you have to realize that it's not about being right or wrong, and sometimes it's about when you enter a trade. Next thing, not thinking about the future, I would say, is probably the number 2 reason. And these are in no particular order, but I would say not thinking about the future is probably the number 2 reason. A small win today can mean large success and profitability in the future. And a lot of times we get into the market with, we're looking for these rockets, we're looking for these big plays, and they don't always play out the way that we want them today. Look at this massive fall here, just for it to turn green later. It fell all the way down here, bounced back up and turned green, but it ran all the way up, fell all the way down. And that's another reason why you don't trade it, before 10 o'clock. A lot of times I'm gonna be honest, there are some really good trades that happen before like 9:35 to 9:45 and then right before 10 o'clock. But steady enough, if you look at it, 10 o'clock is always a great time to get into a trade. 10 o'clock, 11 o'clock, always good times to get into a trade. So there's plenty of opportunities. Later in the afternoon, things get slow, things get choppy. But when you're not thinking about the future and you're playing for a home run instead of playing to be profitable at the end of the week, at the end of the month, at the end of the year, you're kind of setting yourself up for failure. You have to think about tomorrow. You can't give up and walk away. That's another thing. And if you try hard now for your future self, a day will come where you'll see steady success, and then you need time to allow yourself to grow. So you have to realize that. So what you want to do is you don't want to necessarily make large wholesale changes in plays. You want to maintain your account, and by maintaining your, excuse me for just a second, I'm going to drop my phone. You want to maintain your account until it grows, and you can grow your account steadily. A $5 win is still a win. A $10 win is still a win. I can't tell you. We'll get to that. We'll get to that later. We'll say it like this: persistence prevails when all else fails. You need to be persistent. Trust is time, proof, and consistency. You need to learn how to trust yourself. You need to prove to yourself with consistency and persistence that you are going to be a profitable trader. But it takes time, it takes proof, and it takes consistency. Consistency being the strongest word out of all of these. You have to get up every day and be consistent with your trading. The next thing is not having a plan. Failing to plan, as cute as this saying is true. Failing to plan is planning to fail. If you don't go into your trading day, your trading session with some sort of a plan, when you're going to take profit, when you're going to enter, when you're going to exit, I want to go to Friday actually so I can show you a major move that happened that I almost messed up. It was right about here at 1 o'clock. But if you don't have a plan, otherwise all you're doing is just reacting to what the market is doing and guessing. You know? Go over to the next page here. What happens is if you don't have a plan, you're playing defense. You know, you want a plan because you need a plan of attack. It's the only way to build your confidence up at the end of the day. Another big issue is, I would say, using too much money in a single trade. If you're visibly nervous during a trade and every penny that you lose is basically agonizing, that simply means that you're losing too much money. If you click that trade button and that thing is going up and it's going down and you're down and your hands are shaking and you're freaking out trying to figure out when you need to get in and get out of the trade, or you're watching the money go down and now you're praying to, you know, whatever you believe in, oh Lord, please go back up so that I can get my money back. You've used too much money. You know, you really want to use as little money as possible, but maximize your profits. You know, and then as you start to build up a risk tolerance and have better risk management, then you can start adding more money to your trades and to your lot size once you become so comfortable with the current level that you're actually at. Next, which actually follows right into that, not using stop loss. If you get in here and you don't place a stop loss, then you're just playing Russian roulette basically. You're either going like, hey, my thing's either going to shoot off my direction or it's going to shoot off in somebody else's direction, but you're playing Russian roulette with your money, and that's not a good situation to be in. I'll do a video on getting in and out of trades and stop losses later. Today, I just really want to focus on common trading mistakes that we make. That actually leads right into the next point that I have, which is hanging on to a losing position. So now you're in a trade, and you didn't set your stop loss. You've lost some money, it's going down, but it was previously high. Maybe you saw profit, you didn't take profit, but you're like, it can go back to that. But your position's pushing lower and lower. Or maybe you remove the stop loss. Hanging on to a losing position is just burning money. You know, you saw it at the beginning of the video. You don't want to throw money away. If it's losing and it falls to a certain point, you need to condition yourself to automatically get out. A small loss lets you keep playing the game. And the longer you can play, the more chances you have at becoming a steady, profitable trader. Most traders, they'll show you the big wins. They won't show you the losses. They won't show you the hard months and months and months that went into the practice of them actually getting good enough to be a consistent trader. You know, everybody wants to live this short-term Instagram and TikTok life, doing it in one month, or doing it in 10 days or 30 days. 30 days, I turned $500 into $200,000. And I've seen these challenges done. I've seen them actually work. But those traders have so much experience. I mean, 5, 6, 7, 8, 9, 10, 20 years of experience behind them to know exactly what to do in most scenarios. You know, as traders, a lot of times new traders, I won't say as traders in general, but as new traders, a lot of times we'll play every scenario the same. You have to learn to pivot. You have to learn to change. All right. And that brings me to Friday and what happened to me on Friday. On Friday, I had a trading plan. I didn't 100% follow my trading plan because I had a little FOMO for a second there. It worked out, yes, but it could have been very, very bad. So Friday, we pushed up to this level right here. We slowed down as we hit the zone and held. And I'm like, okay, cool. It's time for a reversal. If you look at let's look at the 15-minute candles, I believe it was that day. 1 day, 15 minutes. Okay, cool. So you're looking at the 1 day, 15 minutes. You see this right here. It started to hit here and then it pushed down all the way to right here. And I was like, perfect. I'm in the right trade. And then it fired off like a rocket straight up. And I almost got shook loose, but we never passed this wick here. Had we passed this wick, I would have been shaken out of my trade and I would have taken the loss. And let's see how much of a loss that is. That's from 311 to 312.79. That's a pretty decent loss. You know, that's probably a loss of a couple $100 right there. But we hit here, we wick up a little bit, we slow down. We haven't passed this wick, so I'm still seeing the market structure hasn't exactly changed. We haven't taken out this either for a new high. So market structure remained the same. It fired down. Cool. Comes down here. Comes up a little bit over there. Fires down some more. I get out of this trade right here at 309. I've had a successful trade. I get a couple of $100 out of that. I'm happy for the day. And then as you can see, the rest of the day just chopped you up. If I would have stayed in, it chopped you up, chopped you up, chopped you up, chopped you up. Look at those massive wicks. Those massive spikes for the rest of the day. And then it's continuing to push down. So maybe the market pushes down next week. But as you know, we trade every single day as an individual trading session. So that takes us on to the next, which is the opposite, closing a winning position too soon. Let's say you got in right here at 10:45. It starts falling. No, let's go 10 o'clock. 10 o'clock session, it runs up, it starts falling, you get into the put or whatever, and you get this, what is that? 20 cent to 50 cent. You get that like 70, 80 cent move, right? And then the next candle starts, so you're like, the next candle kind of wakes up, so you close your position too soon. You have to learn how to play the hour. Usually, majority of positions in the beginning of the day especially will move for an entire hour. So let's go to the hour and show you what that looks like. So on the 1 hour, if you look, you can really see it. But the reality is there are ups and downs within that hour, but you kind of want to at least hold for the hour if it's going your way. If it's not going your way, you definitely don't hold for the hour. But if the trade is actually going your way, as you can see, this pushes down for an entire hour, and you're talking about a $8 move versus a 80-cent move. So you have to learn how to let your trades breathe, how to play your trades properly, and give yourself the hour for it to play out. Usually in an hour, most trades are going to move in one direction consistently throughout that hour and get you to the max at the very end of the hour. Let's go to the 5 minutes so that we can see when it's actually changed up. And as you can see, it ran down for the full hour. It never changed. There's a lot of bouncing up and down, and that's what teaches you that you have to have that patience. You have this, basically what you would do is slide your stop loss. You get the profit here, slide your stop loss to that wick. Okay, boom, here you would ignore that 5, but then you would slide your stop loss to this candle. And then it pushes down some more, you slide your stop loss to this wick, pushes down some more, you slide your stop loss. So you continue to slide your stop loss as the changes are happening. Finally, you break your zone, you put your stop loss right there at the zone, it runs down a little bit more, it comes back, pushes, kicks you out of your trade. But you move your stop loss as the trade goes in. You know, a lot of times we don't set our stop loss perfectly, but you want to have stop loss going both ways at all times. So your profit will kick you out as the hour goes on. You know, don't watch the 5 minutes, you're going to want to watch the 15 minutes, but as the hour goes on and you take more and more time, you put it at the wick. Okay, cool. It didn't go back up past this body of the candle, so say your stop loss is right here now. Candle finishes, you place your stop loss here. It never comes up there, it continues to push down. Candle finishes, you place your stop loss over here at the back of this candle. It continues to push down. Now, as you get to the zone, you just push your stop loss in the zone. As soon as it crosses the zone, you put your stop loss at the tail end of the zone and you let it ride for the rest of that last 5 minutes or so. And then if it reverses, you either get out right there, cancel the stop loss and get out manually, or it will kick you out when it gets back right there. And that's how I do a lot of my trades. I'll adjust my stop loss every 15 minutes. If the market is running like it is here and it's a great run, that past body is where I put my stop loss. So I'll let it run 15 minutes, boom. All right, that next candle, as this one starts right here, I'm putting it right there at the back of the body of that candle. Back of the body. The reason that you're putting it at the back of the body is because if you put it anywhere else, halfway down, sometimes you'll get a spike and the spikes will kick you out. So I put it at the back of the body of the previous candle. This is already a profit. If I started up here, this is a profit, back of that candle. This is a profit, back of that candle. And now I'm well in profit and I'm continuing this trend as it goes down, back of the candle. But as it hits the zone, you know what it is. It's gonna bounce off that zone. You put it at the tail end of the zone and then you let's see what's gonna happen from beyond there. And if it breaks through the zone, boom, right here at the end of the zone, at the very end of the zone. And then if it continues to fall down, you just continue to follow that 15-minute process of back of the candle, back of the candle. Now you'll never go to the back of this candle that touched the zone because 1, you don't want to lose all this profit, and 2, it's outside of your zone, so it's automatically the bounce area. You want it at the zone. Okay, and then that that brings us to the next part, and that's closing a winning position too soon. I've closed out plenty of winning positions way too soon. It was a hard lesson for me to learn. It took a long while for me to get to the point where I was comfortable with holding an hour, because a lot happens in an hour. There's a lot of up and down and up and down, and you'll be surprised a lot of the times the profit loss doesn't reset until you've held an area for like at least a minute or so. Every now and again when you're trading, it's not always minute to minute to minute that your profit loss is showing. So there's been times where I've had a lot more profit and I've sold out early, and then it just quickly adjusted and I missed out on a lot of profit. You need to know if this is for you, and you need to figure that out fairly quickly. Anyone can get in the market, play around, have fun, and have a little bit of luck. You need to figure out very quickly, is this something that you want to do? I liken this to playing professional sports. Anyone can have a little fun in the market, make a little bit of money here and there, and you say that you want to be a day trader. But to turn trading into a job requires not only a high skill level, but also time, dedication, and resources being poured into the actual learning process. You know, the fact of the matter is there's a cost of doing business here. You know, run your trading like a business. If you're easily burnt out, this might not be for you. If you're easily frustrated every single time a trade doesn't go your way, you're not able to get out, you're not able to use, you know, just common sense and manage the emotions, the risk, then this might not be the job for you. Next, the next common mistake that a lot of traders do that actually hurts you in the long run and costs you a lot of money is not realizing that losing a trade isn't the end of the world. I put so much pressure on myself to hold a streak alive, you know, of profitability, not realizing that as long as it's small losses, it's okay. You know, holding way too long, trying to, you know, praying that a stock goes back up just so that you don't have to take a loss. If you take a small loss, it's not the end of the world. You roll that over into the new day, you start trading again, and you continue forward from that point on. You know, and those are just some of the common mistakes that come along with trading. Another thing is not seeking help. You know, if you're struggling with trading and you're bleeding money and you're not doing well, you should seek help. I don't care if you go to a YouTube channel. There are plenty of educational sources out there that, you know, are willing to help you for free 99. It's hard to watch a video on YouTube and just know exactly what you're going to do. So in my case, I'm going to roll not seeking help into the next thing. There's only one shortcut in day trading, and that is to get a mentor of some sort, someone who has a high level of proven success, time, proof, and consistency, so that you can trust them to show you how to do things from where they are. The hardest thing that was for me was, you know, so much information. There was so much information to take in that I wasn't able to process everything as well as trade. You do your paper trades, you get into the market, and, you know, in the beginning, I won't even say it was beginner's luck. I was just riding the trends. You know, I learned to ride the trends, and honestly, I felt like a worse trader once I really started to learn how trading works, because as I was taking in all of this new information, it was overbearing, and it was really influencing my decisions, you know, which is going to lead us into the next point: not having the proper mindset. Not having the proper mindset when you go into trading is one of the most dangerous things you can do, because everything becomes an emotional moment. Every win is, woo, we're winning. Every loss is, oh man, you know, again, I'm losing and I'm going down and my account is going to zero, you know. And if you don't have the proper mindset, you can blow your account. If you don't have proper risk management, another common mistake. If you don't manage your risk, if you're risking too much money, or you're not risking enough, or, you know, you're stressing over every little loss and you won't close your positions. If you don't have proper risk management, you're not losing your stop loss, whatever the case is, you have a high chance of blowing your account. If you have good risk management, you should never blow your account. You should always have some money in there. The next one, keeping your money. Losing your money would be the next common mistake. Don't lose your money, lose the market's money. I have a 26-week challenge that I love a lot, and I highly advise you doing it, not as a way to make a lot of money, but as a way to be consistent and have a goal in front of you so that you're not making wholesale errors or mistakes when you're in the market. You want a goal. I can't tell you how many times I've had $100 in profit, $90 in profit, $80 in profit to sit there and be like, we're going to see what happens. And then have the market slow down, not necessarily reverse, but slow down, showing me the signs of a possible reversal, not closing my positions, and then getting burned. $100, $150, $200, being like, man, it's going to run up like crazy, and hoping for a home run when I should have just took that base hit. Take your base hits. That is the next common mistake, not taking your base hits, not taking your profit when you see it. And that brings us back to, it doesn't matter if you're right or wrong. During every single trading session, even if you're wrong, you're usually going to have an opportunity where you can take a little profit. I don't care if that profit's $3. I don't care if that profit is $18. I don't care if that profit is $108. There'll come a time where even if you were wrong initially, you made the wrong choice, it might bounce back for a moment. Now, if it's running out of control, get out of it. Never hope. Hope is not a strategy. Never hope for the market to do what you want it to do. You cannot hope your way to winnings and to being a profitable trader. You need to have a steady action plan. You need to know how much of a lot size you're going to risk, how much you're willing to lose, because losses are inevitable. They're going to happen to all of us. I hate losing personally. I hate losing more than I hate winning, which is why my risk management has increased to fit what I'm doing. I risk less. If I see it's not going my way, sometimes, even if I haven't hit my 10% or 5% stop loss and I'm just like, oh, this is obviously not going to be a good trade, I'll close it out. Close it out. Why? Because if you have money, you can always re-enter the other way. If the market says, hey, I'm doing a full reversal, boom, bounce right here, and it's coming out of the zone, you can re-enter right here and ride that up, and then when it starts to retrace, get out of it. Another common mistake is not realizing that no one's coming to help you. They have that song by Nickelback, and they say that a hero can save us. I'm not gonna stand in your way. You can't stand there and wait on a hero. No one is coming to save you. No one is going to trade for you. No one is going to give you back the money that you lose. This is you versus a chart. And you need to learn to trade with a chart, and you need to learn to trade with a trend. If you're trading counter trends, you better be damn sure that it's going your way. If the trend is going down and it's hitting here, you better be trading for just that bounce, just that little dollar bounce. And then when it hits up here and it starts going back, and in this case it wicked all the way up, you're good. When it hits that 90 EMA, get out, because the trend is still pushing down. If it bounces off that 90 EMA hard, it's still pushing down. I don't care how many times it goes up to the 90 EMA, it's still a downtrending market. You need multiple confluences and multiple corrections showing you, like this here, that the market is going up. Second, you really need to get not being good enough at your zones, not understanding support and resistance, not understanding supply and demand, and most of all, not understanding market structure. Market structure is going to change the game. Okay, I know it sounds like redundant in a joke, but market structure is everything. Supply and demand zones are great, but market structure tells you what's going to happen next. And that is the numero uno thing. Going back in time and saying that, okay, this large wick here is going to push down. You have a boom, you broke above that level there. You haven't broke that level, but you wicked up, but you never actually broke the top of this wick here. So the market's going to start pushing down, and knowing that, now the market continues to push down right here. You didn't break that. The market's pushing back up. And knowing that, market structure is going to teach you everything. I won't get into market structure in this video. I want to learn a lot more about it and get very comfortable with it before I really break down what market structure is and what it looks like. But this is just my simple common mistakes video. But like I said, there are no heroes. No one is coming to save you. No one is going to give you back the money that you lose. So try your best not to lose money. You need to be your own hero. You need to study hard. The market doesn't repay hard work necessarily, but that does not mean that you shouldn't work hard. You work hard so that you have as many advantages when you hit this market as possible. The next common mistake is not knowing yourself. You need to know what type of trader you are. Are you a day trader? Are you a swing trader? Are you a scalper? One, but more importantly, what type of personality and what type of emotional mindset you have. If you are a hoarder and have a really hard time letting go of things, you need to work that out before you start putting money into the market. You know, paper trading is good, but once your money gets involved and you have the ability to lose it, the nerves come in, the emotions come in, the anger and frustration come in, and then the market's kicking your butt and you're not understanding why. You're not waiting for confirmation, which is the next common mistake. Wait for confirmation. Don't get into the trade until it reaches your plan. I know FOMO is real and you want to make as much money as possible. I had FOMO right here, got into the trade too early for a put. Luckily it fell my way, but that's just luck. It's just dumb luck. That yes, it did fall my way. It could have continued to run up. Look at that wick. That wick told me that it could have blasted through here. Fortunately, it did not. Market structure didn't change and it pushed down. You know, but luck and hope is not a strategy. You need to have a game plan when you get in there. To reiterate one of the first things that I said, not having a plan is planning to fail. You know, and that's pretty much it. There are lots of common mistakes. I don't want this video to run too long, but don't just go out there, throw your money into the market and continue to burn your account. If you're burning your account again and again and again, there are some simple solutions. You know, trade with less money in each trade. Understanding your risk management, understanding your market structure, understand your supply and demand, and you know, play off of that. I leave my supply and demands up for months because more often than not we'll return to a certain level. Next, Google is going to have an earnings play, so I'll be doing an earnings play on Google. I want to see where the levels go to as far as the next week goes, you know, and then I'll have my earnings play and upload. And of course, that's a low risk. I'm probably gonna risk a small amount of my profits for the week. I never risk anything from my actual account. I just risk my profits, a little bit of my profits at that. You know, and there's going to be plenty of stuff that you're going to learn. Oh, I almost forgot before I go, and this is probably one of the single most important ones. You need to know why you do this. You know, and money is not enough reason. And singularly, I'll say that money is not a good enough reason. Why do you need the money? I grew up poor and I never want to go back to that, so I want to have a stable income as well as a little extra money on the side. I've got 2 kids. I want to build a skill set that I can pass on to them, and that is why I do this. I do this to build a skill set. I want to be a good teacher. I want to have it to the point where I can walk in a kindergarten class and give them the basics of how to read the charts and the basics of how to place an order and actually execute and possibly make $10, $20, $50 in a trade. And then that's something that they can carry forward with them. I want to be able to teach my children, my family, my friends, anyone who's interested really in trading. And I'm going to continue to make these videos, and they're going to get better as time goes on. You know, I'm a fairly new creator as far as finance videos come, but I'm going to get better as this comes on. But I want to get to a point where I can teach, mentor, and grow people's skill sets as well. So I'm going to work my ass off until I can get to the point where I can show people on a fairly consistent basis with simplicity. And that is the key. I want to get so good that I make it simple for people, because in all honesty, it's a high level skill, but trading is not the most difficult thing to do in life. You know, once you learn the basics, learn market structure, and learn supply and demand. Supply and demand is bare bones right there. You know, it can make you money on a regular basis. You just have to stick to your entries and exits. And I'm trying to think if there's anything else. Honestly, there's nothing else that I can think of right now. Yeah, the why, being good enough, is, you know, very important. I want money. Why do I need money? How much money do I actually need? Do I want to make $10,000 a week or whatever? $10,000 a month, I mean. Do I want to make $10,000 a month? Do I want to make $100,000 a month? Am I trying to be a millionaire? What is my reason for being a millionaire? Am I trying to go on expensive vacations? What is my reason for wanting to go on these expensive vacations? Is it because I grew up in a hometown? You need to know all the reasons why you do this, and they need to be good and strong so that they can convict you. There are more things. Another reason that you lose money in the market is your undisciplined. And discipline doesn't just go in the market. Discipline stretches to every aspect of your life. You need to have a disciplined lifestyle in order to have discipline in the market, in order to have success in the market. If you have, let's say you're a chronic snoozer, and we'll just start with the simplest thing. Get up in the morning and straighten your room up. If you can straighten your room up on a consistent basis, make your bed, pick up this trash from the night before, throw any food away that you have or whatever, then your room is always going to be clean, right? You'll never have to do a massive overhaul cleaning. You'll just do some light spring cleaning here and there and regular maintenance. Your trading and your life are similar to that. If you're a chronic snoozer in your alarm clock, make a commitment to yourself, a promise to yourself. I'm going to start getting up every single morning at 5:55. I get up every morning at 5:45. I either pray, I meditate, or I work out. More often than not, it's working out. Why? Because I'm conditioning my physicality so that I can condition my mentality as well. Get outside. You know, I know that's hard for a lot of people. Get outside, get some vitamin D, go for a walk, get some fresh air, clear your head. You know, if you're on the East Coast, of course, it's daylight. There'll be some time where you can go out in the morning before you trade and just get yourself in that proper mindset. You want to relax your mind for whatever happens in the market. You have your ideas, you have your plans, have a plan of attack for no matter where the market goes. If the market goes up, this is where I'm attacking. If the market goes down, this is my plan of attack. When it gets to this level, I will execute. And that is another common mistake, not properly executing. So I think this video could actually run up for a little longer. If you're getting in the middle of zones on a regular basis, you're going to lose money because there's too much room for retracement as well as a lot of room for moving up. So if you're playing in the middle of zones in the center of market structure, if you're playing off of let's say when things are in the discount area and you're playing it up, that's a mistake. If you're in the premium area and you're playing it down, that's a mistake more often than not. So you need to learn not to play the center of zones and to wait for it to retrace to a point that's good. If it's been sitting down here all day long, you need to wait for it to retrace to that point at the very least before you get in, and then play the bounce off of that. If it's been sitting up here for a while, you need to wait to retrace to at least the point right here before you get in. And if it doesn't happen, then you don't trade. You know, another common mistake is FOMO, fear of missing out. You want to trade every trade so that you can get the big wins, you can get the money. But what you want to do instead is set yourself up for success with your little wins. And then when you get into a trade and it's going the right direction, now you can adjust as the minutes go by, 15 minutes, 30 minutes, hour, to get that big win. In other words, not knowing what time of day you like to trade. I only trade. And I repeat, every time I trade outside of this, it's a mistake and I lose money. I only trade between 9:45 a.m. and 11 a.m. Because if I go after that, the market is too inconsistent for me or it's too slow. I like things to move faster. I like when there's a reversal at 10 o'clock and it's a booming reversal for an hour. I like when it's a change at 11 and it's a booming change. I like large moves so that I have plenty of times to get in or get out of the trade in that hour time frame. I like to move as soon as 9:54 or 10 o'clock or 10:03 or 10:07 comes, once it's declared that it's doing a certain thing, and then I'll ride the rest of the way because, like I said, it's going to move for an hour. All of these are 1 hour moves if you look at it. It's going to move for an hour nearly every time. 1 hour down, 1 hour up, 1 hour up. It went down and up, but it's 1 hour up, 1 hour up, all the way to the max. So like say for instance here and it bounces, if it doesn't get all the way to the top of this zone on that candle, just know that no matter the reversal, 88% of the time, unless the market is in a hard downtrend or uptrend, it's going to continue until it reaches the next zone. You'll have days like this where it's only a downtrend, and that's only because it didn't reach the zone here. So you got to really pay attention to things like that. Downtrend, broke through the halfway point, pushed down into the zone, and now you created another downtrend, but then it came back up to the zone. This is a hard zone that we've had for a very long time. This 300 to 306, going all the way up to 315 and 313. Yeah, like I said, I'm trying to think of anything else. There's not really anything else I think of. What you're doing? What percentage of your account to risk? Again, let me just look over these challenges real quick so that you can have an opportunity to look at those. Go to downloads. Okay, so here is the first tier of the challenge, $200. And I'm going to explain the challenges really quickly to you. 26-week challenges, 6 months with profit taking at the end of each month. You're going to start with $200. Your goal is 10% a day or half your account per week. And then you try to get $100. That's That's 5 days. You got $20 a day for 5 days. And then that gives you a goal in mind of when to get out of these trades. If you're risking, let's say, 10-20% of your account, you're risking $20 and you want a dollar move so that you can get your $20 back or whatever the case is. And I'll be honest, it's not actually $20. What happens is, depending on where you bought your contract and how many contracts you have, you'll probably hit a lot sooner or a little later. But you get to $600 at the end of the month. You take out your initial $200, and that is, again, so that you don't make the common mistake of what? Losing your money. You never want to lose your money in the market. You'll lose the market's money. That's okay. It's like playing blackjack with house money at that point. Next up, you're starting with $400, so now you're trying to get $200, you know, and it's going to be consistent. You'll end up with, at the end of the month, so what was that? Versus before, you were doing 20. Now you're doubling it, and then you're just trying to get $200 for the week, going all the way to $1,200, $800, but then you're keeping it at 25%. So the higher you get, you start going down to 25%, and then eventually 10%. And that's just because it's such a low end challenge. I don't want you to have that pressure that comes with amping up a level. So it gives you a small goal. Once you hit that goal, you've got the consistent skill over a month of how to hit that goal. You amplify that goal ever so slightly, $40 versus the initial $20, doubling your goal. And then you only got $40 for the rest of the times here. Then you start taking $400 and 25%, 25%, 25%. And then you start to get, the goal gets a little bigger in that 4th month, because by the 4th month of this challenge, you should be very consistent. You should be very, very, very consistent. So now you're trying to get $400 a week, and you know, you continue to break that down. That's still not $100 a day yet, but if you're getting $100 a day, you're getting to your challenge faster. You can be done at the end of your challenge, or you can continue to try to hit the goal for the week. And by the way, that's just $80. It's not that big of a goal. $80 a day is not that big of a deal, especially when you're starting with $1,200. So you got $120 a trade that you can play with. You can make $80. I make $80 on a regular basis with a smaller amounts, honestly. You know, then you go here and then you end up with the $5,000 after you've paid yourself all of those times. But the reality is that as you get the skills and you get better, you're going to get better trades. Here's a $1,000 one, which can get you $16,000 plus. You know, you're just starting with half your account. You do this challenge when you're very experienced. Say like you, for instance, you finish your first 6-month challenge, you can jump to this, you can jump to the $500 challenge, or you can just go up a little bit to the $250. It all depends on your confidence level, but why I did it this way with the 10% of the account is I want you to have the opportunity to simply learn, to take the pressure off yourself of trying to hit home runs. I want you to just get base hits. If you're trading with any type of certainty or understanding of the market, these are base hits. $25 a day is a base hit. That is not a home run. That is a simple base hit. Let's say you risk $25 and you got $25. You can risk more, but give yourself opportunity to trade 3 times a day. So you have up to 3 trades to get your $25. And then continue on your journey. Take your $250 out, and the journey goes on. You get to take $500 out the next month. You get to take $1,000 out the following month. You get to take 25% out the following month, and then the list goes on. But you end up with more and more money as time goes on. You know, and then that's the end of the video. That's just what I wanted to show you. Feel free to check out these 26-week challenges. If you're in my Discord group, then you'll see them there with the Promised Land. But like I was saying, get yourself a mentor is the only shortcut to this. You know, I chose Christopher Jackson. He's a very trustworthy person. Feel free to go check out his Instagram videos or his YouTube videos. He does YouTube trading every Wednesday, and then every now and again he'll be on YouTube. But that is CJack130 on Instagram and Christopher Jackson, I believe, on YouTube. It might be CJack130 on YouTube too. But he's my personal mentor right now. He has a great team behind him. The very first person I followed on YouTube was a young man called Keenan Grace. He's a fantastic trader. He also has a Discord. He's extremely helpful, and he can help you learn the basics fairly easily. And his Discord, I think, only costs $5 to $10. So that is a very inexpensive way to get into trading. But there's plenty of people out there who are willing to help. Plenty of people like myself who make videos, who want to teach the community. You know, my job that I'm putting on myself is I want to make better traders, more informed traders. I want to show you how I do, you know, everything that's going on. Another thing is watching other people's success and trying to emulate that success. my success is not your success. Your success is not my success. You might have a lot more success than I do. I'm not trying to emulate what you do. I just want to be the best possible trader that I can be. You cannot live off Instagram. You cannot live off of these TikToks or these Twitter profiles that show you $100,000 and a Maserati and Beamers and Bentleys and fly a jet and stuff like that. Keeping up with the Joneses is going to keep you broke. Find your own journey. Find your own reason why. Find your own amount that you want to make. You know, rather be paying for your mortgage every single month with day trading. A lot of things are very doable, but just making millions of dollars, this is not the type of get rich quick thing that is going to make you millions and millions and millions every single year on a consistent basis. You know, some people want to do it to quit their job. That is admirable, but you also want to realize that the market is an inconsistent place as well. So always have steady money coming in for your insurances and things of that nature. But yeah, try one of these challenges, you know, and I'll leave them up on the screen for a couple of seconds so that you can screenshot it and see how they break down. You know, I give you points to take profit so that you're paying yourself while trading as well. You know, but if you don't take profit, you have more money to trade with. It's that simple. Here's the 500. And again, this has been a full transparency trading session. And oh, one last thing. The reason that I like to show my losses almost more than I show my wins. I actually don't show all my wins, you know, because I win pretty frequently. I think that gets a little redundant and annoying if you're seeing someone win a lot or whatever. I like to show if I get like a major win or an interesting or fun win, like something wasn't going my way or something was going my way and I nailed it. When I get something that really syncs up that I can sink my teeth into, I'll show that win. But I love showing my losses because the reality is like I still make all the same mistakes. I still come in here and I get emotional. I get caught up. I'm praying, God, just let it turn back around so that I don't lose $400 or $300 because I took my stop loss off and now it fell down really hard like this right here where you see it push up and you think it's going up, but then it started falling massively for the last hour, you know, and I'm just hoping and praying and wishing that it goes my way. I still take losses like that. I still get FOMO and jump into a trade too soon and it reverses some more on me, but then my position gets blown up real fast. You know, I still make plenty of mistakes, so I love to show those mistakes. I've lost, I've blown $1,000 accounts. I've blown $6, $7, $8, you know, $5,000 accounts and stuff like that. I didn't have proper risk management. I didn't have proper market structure understanding. Damn sure I didn't have proper market structure understanding. I just got that the other day. Thank you, Davon. I didn't know anything about supply and demand when I first started trading, even watching Keenan Grace. You know, he teaches supply and resistance, which is, you know, in his way, he won't trade in the gamble zone or within the inside of those zones. He likes to trade breakouts. So I didn't know anything about supply and demand with his teachings, you know, but he was a very good instructor. Plenty of videos online that I watched leading into it, but you need someone who has it all together to really drive it home for you. You know, so do seek help. Yes, there is no hero coming, but there's plenty of help out there. There are plenty of people who can aid you. You know, and for like the 4th time in a row, I'm going to end this video. But yeah, I really enjoy doing these for you guys. I hope they're helping somebody. You know, if it helps you out, feel free to leave a comment down there below and just let me know that I'm doing something that's helping you out. I want to help people learn and grow, and we can all get money together. It's not me versus you or anybody else that you usually know. It's usually us versus some massive dude with like millions of billions of dollars, some hedge fund or some massive company, you know. So it's not me versus you. I want to teach as much as I can and just show you that you too can make money. I do make money on a consistent basis. Am I profitable yet? No, I'm not profitable yet. I'm still in the red. This is my first year training, so I want to get in the green. Hopefully by next year I'm back in the green, but I'm doing so much better. I'm being more consistent. I'm following, you know, a lead that I really enjoy. I'm around other traders who are very positive mindsets, you know, who are trying to make each other better. Like I say, trading is an individual sport, but you can still have a good team around you. You know, you're the one taking the shot, but you can still have a good team around you. And I've grown leaps and bounds. You know, I'm proud just looking back at my old self. You know, always think about that future self. A year from now, I'm going to be a different type of trader. 2 years from now, I'm going to be a different trader, but I want to keep my money so that I can stay in the game and have longevity, because in the long run, once you reach, let's say, mastership, and you know, you reach that 3, 4, 5 year mark, you're gonna look back and be like, damn, I was wilding when the market first opened up, you know. But learn from other people's mistakes, learn from your mistakes, and grow. Every loss is a possible lesson and opportunity to learn from. If you learn, you'll get better. If you get better, you'll make more money. If you make more money, you'll have success and you'll be happier. Motivation is short term, happiness is short term, fulfillment is long term, and discipline is long term. So seek discipline over motivation. This video might be highly motivating you. You might get in the market, lose a little bit of money, and all of a sudden your motivation's gone. Be disciplined. Seek fulfillment. A watch, a car, a house, all that stuff is material things. They're gonna make you very happy. But if somebody stole your motorcycle, stole your car, burned down your house, now your happiness is tied to that thing, that possession. And that's not what you want, because it's not a healthy way to live. You want to be fulfilled. You want to be doing something that's fulfilling. I find trading very fulfilling. I find getting in here, going into the market, and having my successes and having my losses brings me joy. A similar joy that I get, from being around my kids, having the time to spend with them. The market offers me that extra time. The extra money is allowing me to buy some extra time. I spend less hours in the warehouse. I spend less hours during my Turo business and other businesses because I have more money coming from the market to subsidize and add breathing room to my month. I have more money than I have month right now, and that is the goal. You want to get out of that hand to mouth and check to check into that point where you have more money than you have month on a consistent basis. Much love to you guys, man. I appreciate you for sticking this out with me. I know it was long and sometimes redundant, but I wanted to at least get as many points across as I could really think of. And then next week we'll get into the charts. Happy Sunday. I hope everybody's enjoying a little bit of football. The 4 o'clock games are just now starting. I've been your host. This has been another Full Transparency Trading Session. I'm Sebastian, and I'm also out of here.